Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chainwala from Kotak Securities Commodities Research Desk. And like in every episode, we will explore the dynamics of commodity markets, examining the ongoing developments, and uncovering the latest trends. So let's get started. Global markets saw surged optimism last week, buoyed by rising expectations of a substantial Federal Reserve rate cut at the upcoming FOMC meeting. The dollar slid below the 101 mark, and the yield on the US 2-year Treasury note tumbled to 3.56%, its lowest level since March 2023. This shift in investor sentiment followed moderating inflation data and a dovish statement from a Fed official, which renewed speculation about a potential 50 bips rate cut on September 18. Meanwhile, the European Central Bank delivered a 25 bips rate cut as anticipated, but ECB's Governing Council emphasized it is not pre-committing to a specific rate path, reaffirming the need to take a data-dependent and meeting-by-meeting approach. This tempered expectations for an ECB rate cut in October, helping the euro gain against the dollar. Besides, swap traders are currently pricing in a 40% chance of a 50 basis rate cut in September 18. Also, former Fed Chief William Dudley supports this outlook, citing a strong case for such a cut despite persistent core inflation in August. This fueled a significant rally in US equities, with the S&P 500 and Nasdaq Composite posting their largest weekly gains for the year. Moving on to commodities, COMEX Gold and silver prices soared, driven by expectations of a jumbo Fed rate cut. COMEX Gold futures reached an all-time high of $2614.6 per ounce, while silver prices rallied 10% to $31.28 per ounce. Market expectations for a 50 bips rate cut shifted after a rise in US jobless claims signaled a softening labor market and moderating inflation indicators, with the CPI showing its smallest gain since 2021 and modest increase in PPI in August following a downward revision to July's figures. Technically, on the daily chart, MCX Gold October futures rose rapidly after breaking above the consolidation, which has been forming for 3 weeks, the barrier of 72,300 last Thursday. On Friday, the price maintained its strong trend, reaching a high of 73,613. We anticipate price to maintain its positive trend over the coming week, with the initial resistance at 74,100, followed by 74,750. On the flip side, 72,300 will operate as a price support. Talking about crude prices, WTI crude rebounded sharply from $65.3 per barrel to $70 a barrel, primarily driven by supply disruptions caused by Hurricane Francine in the Gulf of Mexico and an improved risk appetite amid growing expectation of Fed rate cuts. According to Bureau of Safety and Environmental Enforcement, energy producers have shut in 730,000 barrels per day of oil production and nearly 992 million cubic feet of natural gas from Gulf waters. Earlier in the week, oil prices fell to $65.3 per barrel, lowest since May 2023, on demand concerns from major consumers like the US and China and aggressive speculative selling. Additionally, OPEC and the IEA reduced their global demand growth forecast for 2024 and 2025, while the EIA expects global oil demand to average around 103.1 million barrels per day this year, up from its previous forecast of 102.9 million barrels per day. Talking about gas, NYMEX gas futures witnessed a second weekly gain and surged to $2.4 per MMBTU as US gas stocks rose less than expected by 40 BCF last week. Also, warmer than normal temperatures across most of the US this month provide support. On the technical front, MCX natural gas September futures on the weekly chart closed positive for the third week in a row, indicating a bullish bias. The price closed on Friday at its highest level in 2 months. On the daily chart, the super trend 7-3 indicator has turned positive, while the RSI 10 is above 55, indicating a bullish bias. We expect the price to continue its short-term bullish trend this week. Initial resistance is at 205, followed by 217, with the nearest support at 179. Base metals on the LME also saw gains last week, boosted by a weaker dollar and hopes for additional stimulus from China. Now, metal prices may continue to rise as China's retail sales, industrial production, and urban investment all missed estimates in August. Retail sales rose by 2.1% in August from a year ago, missing expectations of 2.5% growth and slower than 2.7% increase in July. Industrial output rose by 4.5% in August, lagging the 4.8% growth forecast. And fixed asset investment rose by 3.4% for the Jan to August period, slower than the forecast of 3.5% growth. This bolsters the case for stronger stimulus, especially after China's central bank indicated it would intensify efforts against deflation and prepare additional policies to revive the economy. Now, as markets prepare for the FOMC statement, expectations are split between a 25 bips rate cut and a 50 bips rate cut. US retail sales data scheduled for release just before the FOMC announcement, just a day before the FOMC announcement, could add further volatility. Meanwhile, the Bank of Japan and the Bank of England are expected to maintain their current policies. Overall, FOMC is going to be the focus for the markets this week as jumbo rate cut could boost market rally further. On that note, we end this session of Commodities Audiocast and hope that we've offered you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.